What up, people? It is January, what is it, January 12th. Today it's a Wednesday. Things are looking good. I'm looking at the Cronos chain, and man, there's a new competitor in the building. I've been looking at these guys for the past couple of weeks. I joined their AMA session on Twitter. The AMA session is not Ask Me Anything, basically, and the Cronos chain official team on Twitter hosts these AMA sessions every couple of weeks. Last week, it was this protocol, which is a DEX, an automated market maker with different characteristics that are making them stand out, in my opinion. I listened to the team. I liked what they stand for, man. There's a couple of things that make them stand out for me, and I think you would be also interested in them. This video is, a bit of an overview, but, soon enough, the more questions you guys have, the more details I'll delve into. But the project's called MMF Finance. It's Mad Meerkat Finance. Basically, it was an NFT collection. They got a bunch of NFTs. I think based on the AMA session, they said that they were bought or owned by the NFT collection team, and now the NFT collection team has another DEX. So that's based on what the history behind the protocol is. This is what the actual protocol. This is what the NFT collection looks like. This is the website. I'll leave it in the description below. I'm not interested in NFT. I'm more interested in the DEX. This is the actual DEX. This is the platform, and it's very similar to VVS Finance in terms of what the layout is. Trade. You can exchange, tokens. You can provide liquidity. You can do whatever you want. You can earn in their farms, which so far it looks like they have very high APRs that competing with VVS Finance at the moment. But again, there are different tokens in here that you got to also look into and all that. But again, high APR so far on certain tokens. You can also earn. So these are just for you to provide liquidity and earning farms. There's also Savannah, which is basically where you go and stake your whatever tokens or MMF tokens, so you can earn on them. There's also different tokens you can earn as well, like memes or LIQ, MMO, MINO. Is a bunch of stuff basically. So it's pretty nice to see. But again, very easy to use kind of user interface. One thing that also they got is referral. So if you're first someone to the platform, you will get some sort of you'll get 1% of whoever you actually brought to the platform, 1% of their earnings. It's just something also VVS Finance has, but they didn't really apply it yet. Launchpad, same thing. It's just like an IGO, whatever gem offerings there are. Now they got an 11 hours, croissants. If you want some croissant tokens, they got it there as well. Obviously, they're trying to be more and more involved with the market, and they, there's a lot of competition, man. And I think whoever's trying to compete with VVS Finance, there's a lot of competition, especially with VVS Finance being used or being natively used in the Crypto.com DeFi wallet. If you're on the Crypto.com DeFi wallet and you're trying to swap tokens, you don't even need to go on VVS Finance to swap tokens. Indirectly, behind, in the background, VVS Finance is being used to facilitate or route those transactions. So there are favorites on the Cronos chain so far, and whatever other automated market maker that comes in the picture, they really need to have something additional, something that grabs people. And I think MMF Finance is really trying to be that. So good job by the team. We'll get into the tokenomics and everything, and their fee structure, how they collect fees and all that. And I really think you're gonna like it. But this is what it is. Again, Launchpad as well. It's like where all the IGOs get hosted. And besides that, maybe if you look at the holders right now, this is on the Cronos, Cronos.crypto.org. Obviously, the top token with the most holders is VVS Finance, 63,000. The next one here, all the way down from an automated market maker, we got also money market for Tonic as well. So Tonic is also backed by Particle B. All the way down here, I see Cronos Swap, which I will make a video about it maybe tomorrow or the day after. Beefy Finance with 6,800, and if we go all the way down here, we see MMF with 4,200. So they're still pretty small, but they're gaining traction slowly, and I think there's a lot of room for growth, especially if we look at the actual price action. So far we see that we are down almost, what do we have here? I think it was 81% or something, 76%, and I see 81% of the all-time lows. I remember my numbers, man. So 77% down I think it's it's at a nice discount. I guess it's closer to the all that, so that it's in price, not discovery, but it's really below any kind of price movement we have from before. So if you're comfortable with buying something around those levels, do you? But this is a pretty nice discount for whoever is actually interested in this. So if it was pumping all the way at the top here, you know me, guys. I tell you, never buy on green candles. Now we had a nice dump, I guess. Is it a good place to buy? Something that's actually, worth asking, even if we get, it's like 237% to the previous, closing, to the all-time high closing price, good 3x. Yeah, looks pretty nice. I'm not gonna lie, but again, it all depends on their fundamentals as well, what they are standing for. This is the white paper, and to give you a summary, I looked at the white paper a couple of weeks ago. I've been looking at it as well. I think the biggest thing that stands out for me in terms of what makes these guys, a bit special is their lower fees. So basically they got, instead of on VVS Finance, we got 0.7, I believe, 0.7, what do we have here? 0.3 actually. So 0.3% for any swap you make on the platform. They take 0.3% on it. But for MMF Finance, they take 0.17. So it's almost at half the trading fee. But not only that, the way they're going about distributing those fees is also actually pretty interesting. So with VVS Finance, we see here that 2/3 of the swap fees, so 0.2%, is going to the liquidity providers. Great, more fees for the liquidity providers, and 1/3 of the swap fees is going to to the treasury, and the treasury can do whatever they want basically with it. The swap fees will go first into the This light keeps on dropping every time. This is crazy. So the swap fees will first go into the reserve for liquidity pools. Users will receive their proportionate share when they return the pool token to redeem their share of reserve. Sure, no problem. But how MMF Finance is going about it is, so temp is 0.1% will be returned to the liquidity pool. Sure, no problem. 0.05% is actually going back as a buyback for MMF to form protocol-owned liquidity. So protocol-owned liquidity is, it's this new kind of thing added to the automated market maker. I think they started off. I forgot what the other protocol that started off was the pioneer behind it. But it's just another way for AMMs, for automated market makers, to kind of bypass the fact that they need, you need a lot of people to come in. You need a lot of people. You need to incentivize a lot of people to provide liquidity because, it's a decentralized exchange, basically. There's no entity in the middle. We don't have an order book in the middle where people can buy and sell from each other. How do you go about having, it's just like a similar thing to an to liquidity book and the decentralized exchange. You have, you need people to provide liquidity, and for them to provide liquidity, you need to incentivize them and give them rewards and all that. But what happens when something comes up and now there's a lot of competition in the market? You need to give them more rewards or something like that, because this is called the mercenary capital, where people come in, and if they don't like the rewards you're giving them, within seconds, they're out and they're going to the next protocol. So there's something there that a lot of automated market makers actually deal with, which is, you need to give a lot of, and that's why you see a lot of high APRs. You need to give a lot of rewards for the people to continue. But then again, they all start selling. And then whoever's holding the token, they start getting diluted more and more, and whatever you own, the price continues to rise, to go down, and there's a race to the bottom, basically. So there's a lot happening there, and that's what protocol-owned liquidity actually takes into account and actually tries to solve. So I'll explain to you what I mean by that in a second here. So 0.05% is going back to buyback of MMF to form protocol-owned liquidity, and 0.02% is going to MMF Finance Treasury. Actually, so this is the actual DAO I was talking about. Olympus, that was the first project in the DeFi space to introduce the protocol-owned liquidity. However, MMF Finance is the first AMM DEX that will be introducing POL to their system, which is actually pretty good. So the biggest thing with protocol-owned liquidity is this. So by allocating a big portion of their fees to buying back MMF and forming liquidity pools, they will be able to ensure that there's as the platform scales in trading volume, it will help create deflationary pressure on MMF, resulting in a price increase over time. So they're buying back the MMF. right? They're buying it back. They're not just emitting MMF and diluting everybody. They're buying back. The more trading volume happens on the actual platform, the more they're gonna buy back MMF from using the trading fees, and they're also gonna have their own liquidity. So what happens with that is, instead of people coming in to provide liquidity and they leave whenever, and then that happens, and the lower liquidity we have on the platform itself, the more price fluctuations come in. If someone comes in with $1 million, it just destroys the whole quote unquote order book or liquidity pool. There's a lot of arbitrage that starts to happen. The price starts to fluctuate a lot, and permanent loss out the building. There's a lot that happens. But with protocol owned liquidity pool, with those trading fees, they start having their own pools. They start generating their own pools, and it kind of helps stabilize the liquidity pool. They can also provide liquidity pools on other platforms. They can probably go to VVS Finance and have their own liquidity pool there and still accrue a lot of trading fees as well like that. So it helps a lot with the stability. And not only that, they buy back their own token with it, which kind of helps the token to be deflationary over time, which, causes the price to rise. And people don't get diluted with these high rewards that they keep giving everybody, and everybody goes and sells, right? So there's a lot that these guys are trying to solve, and I really like how they're going about it, and it's pretty nice, so I can't really lie. So on top of that, by performing liquidity pools, they are ensuring that there will always be liquidity for MMF tokens. Even during bear market, there will be enough liquidity to support any sell-offs. Why? Trading fees. They're getting their own pools. They're not depending too much on liquidity providers, and they're not giving extremely high APRs so that the price actually continues to fall. So it's pretty nice. I like it. So, lower trading fees. 2, the fact that they have protocol owned liquidity. I like that. And they will have less price impacts whenever there's high trading activity on the actual exchange. So what's the third thing I had here? Maybe the tokenomics. So let's just talk about the tokenomics here. There's a couple things with them burning tokens. So we'll just go to MMF Tokenomics, and we'll go to this right here. So they have 1% for the launchpad, great. 9% for used for partnerships, and 10% will be used for development. 80% will be allocated to the MMF community. Now, the way they are actually the way they are burning tokens is through 2 things, right? So just like how we went here, we talked about, where is it at? So launchpad. So through the launchpad, just like how VVS has a launchpad and they're burning tokens, through this here, so raising funds for the project, now MMF the Crow LP tokens. Once people, provide liquidity and go to the launchpad right here, the launchpad, and they connect their wallets and they put in whatever liquidity providing requirement by MMF Finance, whatever the value of that in MMF will be burnt after the project is out. So we're having where they're burning tokens with every project that comes into the platform to get launched. Just like how with VVS Finance, we're having an IGO, initial gem offer. These guys have also their launchpad. They're burning tokens on it. And the second thing was them burning tokens through the performance fees. So when we go to MMF Finance here, and I'm going to earn to Savannah Pool, and when how we had with VVS Finance, you have a manual staking and you had an auto staking. With the auto staking, you have a higher APR. Why? Because they're constantly harvesting your rewards and putting it back in, so your capital continues to grow and grow exponentially as we move forward. But with the manual, so let's just go here. So earning mines. So with manual VVS, the APR is lower because you will have to go and actually unstake this and then restake it again, and then increase your capital and exponentially increase your APR. With auto VVS, it's actually happening on its own. But the biggest thing here, so you have a performance fee of 2%, and I think for MMF Finance is actually the same thing as well. So if you go to the roadmap and we go here and performance fee, so they also have a 2% performance fee, subtracted automatically from each yield harvest. Now because they're doing the harvesting for you, not you. So the MMF collected via the unstaking fee and performance fee is burned every week as part of the regular MMF token burn. So more and more deflationary, right? They're giving high APRs, but they're also burning tokens through the launchpad, through the auto MMF staking, and things look, I like that. I like the tokenomics behind what these guys are doing, and it's pretty good for the holders, right? It's pretty nice for the holders. Now it's still in its initial phase. You can see that the price is still, it's down a lot. But again, guys, Cronos chain is developing slowly. And trust, I don't want to say trust me, but I can see a lot of growth coming for the Cronos chain, and we are the people that have been there since day one. So, I think at one point in the future, we're going to look back at this, and we're going to see, we were early on to this, and I love it. But don't get too hyped up, man. Don't just go and start putting your whole life savings into this. Look into it. I'll leave all these links in the description. Let me know if I missed anything, but there's a lot to this that I think MMF Finance is going to come up there at one point. So one last thing is with their NFTs as well. So they have this feature also that you can actually, so based on the AMA that I actually listened to, they have NFTs staking. And so if you own one of their NFTs, you can stake it, or any NFT. I'm not really sure, but I'm pretty sure for their NFT. So this is what we have. So by holding Mad Meerkat NFTs, you will receive a boost in the farming rewards. So it's pretty more and more incentivization to use the platform. And Mad Meerkat NFTs will also be listed in MMF Marketplace, where users can buy and sell, auction their NFTs for MMF tokens. So holding their NFTs as well, and I think you can stake them, but I will double check that. I'll go back to the AMA and see if they mentioned something more about that. But more and more incentivization with NFTs. They're trying to look special and unique. I like it. So I think that's pretty much it. Them burning tokens, NFT integrations, the protocol owned liquidity, and their lower fees. I think they're gonna set, they're setting a nice standard for themselves, and I really like the team. They look like they know what they're doing, and they sounded pretty motivated to be, a big player on the marketplace. So I think that's pretty much it for me on this video. I'll leave all these links in the description for you, so you can read up on it and see what it is. I want to give you a quick overview, not too much into the details. And again, check them out, see what they're all about. Check out their Twitter, and most importantly, subscribe to the channel, man. I've been talking for a while. You haven't subscribed yet, so make sure you subscribe to the channel. Everything Cronos, everything crypto.com. We talk about a bunch of other things. And yeah, appreciate all the support. Appreciate all the help. The likes, the subscriptions, the shares. Thank you guys for watching. Appreciate you. Make sure you stay smart. Never FOMO. Never buy on a green candle. No, don't listen to anybody, even us, man. Go verify. Never trust. Verify. Thank you for watching, and have a great day.